Good afternoon. Welcome to our UpSkill Works Forum series, where we engage with business and community leaders, policymakers, and leading thinkers on the key workforce issues our region confronts. I'm Peter Beard, and I lead the Greater Houston Partnership's UpSkill Houston initiative. Good afternoon. Welcome to our UpSkill Works Forum series, where we engage with business and community leaders, policymakers, and leading thinkers on the key workforce issues confronting our region. I'm Peter Beard, and I lead the Greater Houston Partnership's UpSkill Houston initiative that partners with employers, educational leadership, and community-based organizations to strengthen Houston's talent pipeline. Before we get to our guest, I want to do two things. First, I'd like to share with you some important perspectives about what we're seeing related to the COVID crisis in the region, because we are at a critical inflection point. Second, I'd like to review a couple housekeeping details. As many of us know, we're seeing the local and national news reports and looking at the data coming out of the Texas Medical Center regarding the surge in COVID-19 cases here in Houston. As you can imagine, the partnership leadership speaks with the TMC leadership on a daily basis, and their tone has shifted to one of serious concern. As they begin using some of their bed surge capacity, and the trend does not seem to be changing. In looking at the data, we're about 2 weeks away from being in an unsustainable surge situation, which means the hospitals will have overwhelmed their normal surge capacity and will start placing patients in non-traditional rooms, possibly including hallways. Since we're 2 weeks away from this situation and this virus has about a 14-day lag period in seeing cases go critical in the hospital setting, the actions we take today have a critical and direct impact on where we are 2 weeks from now. We did well for so long, but we know there is a quarantine fatigue. We all want to stay open. We want the reopening to be successful and sustainable. The easiest way to protect our family, our friends, and our coworkers is to do the 5 simple things we already know. 40% of people infected with the virus never show any symptoms, but they can still spread the virus. That is why it is important to observe these simple practices. Maintain a social distance of at least 6 feet and avoid being in a group larger than 10 individuals. Wear a face mask when in public venues. Wash your hands frequently. Clean and disinfect frequently touched surfaces daily. And finally, if you're showing symptoms or have been in close contact with someone who has tested positive, you need to get tested. If you do test positive, protect your loved ones, isolate yourself, and let those who you have come into contact with know about your positive test. This is not something to be embarrassed to share. It is a responsible action to take because while formal government contact tracing programs continue to expand, the process is slow and the system is being overwhelmed by new cases. The sooner your family and your friends and coworkers know about a positive test, the quicker they can get tested themselves and isolate if need be. Let's take this time to take care of each other. We know these are key practices to protect ourselves, our families, and our friends and our other Houstonians. Please join me in being serious about doing them. What we are finding is that while businesses are very strict in their protocols with employees coming back to work, it's the behavior outside of work that is putting them at risk, which then in turn puts their coworkers at risk. One other key point to make to your teams: gatherings over Memorial Day weekend contributed to this spike. Please make responsible decisions as you plan for the 4th of July and other social gatherings. And finally, you may have seen in today's paper, the partnership issued a statement asking employers to strongly consider shifting back to a work from home policy for employees who can do so successfully. We are attempting to minimize the amount of contact points, and this seems prudent given the current transmission rate. If you need additional background information about how to reopen safely on the partnership, you can find that on the partnership's updated WorkSafe page. Also, the partnership has developed 15 WorkSafe principles to provide guidance to companies and organizations, and we've curated industry best practices and guidance to help businesses develop sector-specific plans to minimize the risk of transmission in the workplace. As I open today, tomorrow, and the coming weeks, we're at an inflection point now, and I ask that you do what you can as leaders in the community to ensure these important messages get across. And now for those housekeeping details. As all of you know, all attendees are muted and your videos are turned off for the entirety of the webinar. The chat function should not be used for questions and answers. This will not be moderated for questions. Please use the chat function to connect with our production team if you have any issues. If you have questions for Parker or for me, you should direct them to the Q&A tab at the bottom of your screen. This will be moderated. And today we're fortunate again to have Parker Harvey, who serves as the principal economist at the Gulf Coast Workforce Board. He is a seasoned economist that has great understanding of the labor markets and can help people understand our dynamic regional economy and its workforce. Today's topic that we will be addressing is the current state of Houston's labor economy and what trends he is seeing. Welcome, partner, Parker.
Great, thank you very much, Peter. It's a pleasure and honor to be back. Very somber and sobering advice, but hopefully advice that our attendees will take well. All right, I'm gonna go ahead and switch over here and start sharing my screen and we will get started.
And as Parker's getting ready, I've asked him to, help us understand what the current employment and unemployment statistics for May, which were released in the region recently. And I know he'll kind of share with you, it's a bit of a head scratcher. And so we're going to kind of go through that. And I've asked him to also look past the volatility of the next several months to understand what we should be thinking about in terms of the rebound of our labor economy. Parker, take it away.
Thank you very much, Peter. All right, everyone. So we're going to provide a bit of an update on what we've seen since the last time we all got together, which since then, I think we've had a couple of jobs reports. And right now we're coming off of, well, at least prior to the one from last week, arguably the worst jobs report in US history and the worst one for the Houston area, most certainly. And the expectation going into May's jobs report was a continuation of what we saw in April, that being increased unemployment rates as well as additional job losses. But before I get into all that, here's what we're going to cover. We're going to look at our jobs report here. We're going to take a brief look at the national one in the context of ours and what that does as far as how we look at things going forward. We'll talk about UI claims and how their significance is evolving in the near term and what that might mean for us trying to understand our unemployment situation going forward. And then we'll last touch on trends in job ads. All right, so first up, employment. So as I mentioned, we were expecting to see continued job losses, a rising unemployment rate. We did not. In fact, we added almost 74,000 jobs in May. That would be the largest one-month gain on record easily, and implies about 1 out of every 5 of the 350,000 jobs we lost between March and April were recovered. I'll also point out that in a typical year for us here in Houston, assuming the economy is stable, if not growing, we should add about 60 to 64,000 jobs, and we clearly eclipsed that in just a single month, just to give you an idea of the magnitude of what we saw. Now, here's what was growing last month. So leisure and hospitality, your bars, your restaurants, your hotels had a great month, almost 40,000 jobs, and we reclaimed about 1/3 of the jobs that we lost there in the preceding 2 months. Education and health services, particularly healthcare, had a really good month as well. We got back about half of those jobs, maybe as much as 60% if you look just at healthcare. Now, I will note, I just happened to see a headline go across the front page of the Houston Chronicle indicating that Governor Abbott is now going to put a halt to elective surgeries in Harris County and some other large ones as well. So obviously the situation continues to evolve incredibly quickly, and it just shows just how quickly things can change and go different directions. Trade, transportation, utilities, basically retail, also we claimed back about a third of those jobs. In construction, we got back about 1/4. So those sectors all saw a fairly decent rebound, and it's what we would expect given the reopening process that we've been going through since the beginning of May. Now, on the other hand, we did have some sectors that continued losses beyond what we saw in April. Government being the largest one, and I'll come back to that and talk a little bit more about it because there's a couple of different things going on there, but down only about 5% from where the employment was, say, back in March. Mining and logging, our upstream oil and gas, that continues to languish, unfortunately, with oil prices, although they've gotten back to 40, still pretty low, and we're still reeling from that phase where we went through negative prices as well. That sector, unfortunately, is going to continue to struggle, but that's not news to any of our attendees. Manufacturing, surprisingly enough, didn't see as weak of a May as we would have expected given its connection to oil and gas. Nonetheless, though, didn't see much of a turnaround there at all. In fact, we continue to see losses. Other services, typically where you find things like your salons, your barber shops and whatnot, those were only reopened, I believe, around maybe May 8th. And so it's interesting that you didn't see any recovery there in that space, but there are quite a few different categories of industries in that catch-all of other services. So let's talk about government for a moment. Government typically doesn't lose jobs in the month of May overall. And so for to see it happen, it's pretty surprising, frankly. You've got a few different sub-varieties of government. You've got federal, you've got state government, you have local. Within state and local, you've got state educational and local educational services. So essentially our public 2 and 4-year universities, as well as our public primary and secondary schools. So let's talk about federal government. Keep in mind, right now, we are in the midst of the 2020 Decennial Census. And typically what you've seen with every census going back to 1990 is in the month of May, a pretty significant bump in federal employment. It's temporary, but we do see a pretty significant bump. The last time we had a census, I think we added around 9,000 jobs just for that single month, federal employment jobs. And as you can see, we only added 100. So we're talking effectively a 99% drop in the number of federal government jobs. Enumerators going out and collecting information from households, those didn't take place this year for obvious reasons. COVID-19 put the kibosh on people going out and actually knocking on doors. Some of that has returned, but it's important because the census determines a number of things. House of Representative apportionment is one of the big ones, as well as how federal funding is distributed across states. And the timeline or the deadline for the census to be completed has now been pushed all the way into May of next year, essentially. So major ramifications from COVID-19, the federal government and the census have not emerged unscathed from that. Now, when we look at state and local government, what we're seeing is sort of interesting as well. You typically see job losses in state and local government, particularly the education portions, in June when the school year traditionally ends. We've actually seen it pull forward by about a full month, and we're seeing losses now. A piece of that as well within the local government space that's non-education related is probably related to municipalities seeing a fall in sales tax revenue and perhaps starting to make some cutbacks there. So that's another thing that we should probably continue to look out for. But overall, government did the exact opposite of what we normally would have expected, and we're missing quite a few jobs from federal government in terms of the census, as well as potentially from our education jobs being pulled forward and those losses there. So I'll pause here for a moment and allow Peter, if you'd like to interject, any comments, questions at this point?
No, I mean, basically you saw what you were anticipating seeing, which is as we reopen, many of the parts of the economy that have been shut down were beginning to recover. Is that a fair assessment?
But there's definitely another part to that story. We'll definitely touch on that here in just a moment. But yeah, you raise a good point. On the face of it, everything that we saw makes sense in the context of just anecdotal knowledge of the reopening process since the beginning of May. All right, so now let's move on and talk about the unemployment rate. So again, as before, we anticipated seeing the unemployment rate continue to rise, and all else equal, we should have seen it maybe rise to about at least maybe 18, 19%. Instead, it actually fell to 13.9. Here's a look at the unemployment rates and the number of people that were unemployed over the last 4 months or so. And you can see there, April, 455,000 people, 14.3% unemployment rate. And the rate fell, but interestingly enough, the number of people in absolute terms that are unemployed rose by about 8,300. Not a huge number in the grand scheme of things, but it did continue to rise. Now you might be wondering, well, how is it possible that that number can rise while the unemployment rate falls? Well, it's because 129,000 people, according to this survey, the household survey, where you're counting individuals rather than counting payroll jobs, indicates that about 130,000 people went back to work, which is pretty astonishing. Sometimes the household survey that counts people and the payroll survey that counts payroll entities on businesses, they don't necessarily align. That happens at the national level quite often, and it's what we're seeing here as well. Unfortunately, there's never really a good explanation besides the fact they are different surveys measuring different things. Now, here's just a look back at the unemployment rate over the last, say, going all the way back to 1990, so the last 30 years. And really the only sort of addition to this that I've made compared to maybe the last time is that we now have been officially declared in a recession by the National Bureau of Economic Research, in case you didn't see articles on that. They declared the recession from a monthly standpoint starting in February, but peak economic activity in all likelihood occurred in the fourth quarter of 2019. So there's some reasons for that discrepancy, but in short though, end of last year, beginning of this year, was the top of the most recent business cycle, and we've now entered into a recession officially. Now, let's talk about what's going on regionally here. There's a lot more interesting things going on, in my opinion, at this point. Here's a look at our 13 county region, which is what my organization is responsible for in terms of workforce development. And of course, as I mentioned before, 13.9% unemployment rate. What we're seeing is a reversion back to some of the more common things we've seen over the last 30 years, namely that Matagorda and Liberty counties have the highest rates in our region. Traditionally, Matagorda has had the highest rate, about 80% of the time. Whenever it hasn't had the highest rate, it's typically been Liberty, and that's what we're seeing here as of May. Liberty at 15.5%, Matagorda at 15.3%. If you recall last time, and I don't know if you have, some of you have probably seen some of my other presentations, but what I highlighted was that Galveston County actually had the highest unemployment rate of the counties in our region for April, which was very unusual. It was only maybe the second time that had ever happened in the last 30 years. And we had to chalk that up to the tourism, retail, things like that, leisure hospitality, that whole space of industries being ground zero for the shutdown as a result of COVID. This time around, it drops to 4th place as far as the highest unemployment rates go. Saw the largest over the month drop of our 13 counties and its largest 1 month drop on record. So talk about what a difference a month can make for just that county and what's going on. I'll also point out too that we still have 2 counties out of our 13 that have not exceeded their previous all-time high unemployment rates as of May, which is pretty remarkable when you think about it. Colorado traditionally has had our lowest rate in the region over the last 30 years, still hasn't reached its previous high. Neither has Matagorda either. Now, I will point out though that even though the rate for our region as a whole came down, 5 of our counties saw their rates of unemployment go up. So you've got Austin, Colorado, Wharton, Matagorda, as well as Liberty. Now, because these are outlying counties with relatively low population density compared to, say, the core of Harris, Montgomery, Fort Bend, et cetera, it didn't really move the number. But it is interesting, though, that the counties in the fringes of our region are continuing to see their unemployment rates go up. And in fact, Colorado saw its rate rise the most of any of the counties, in contrast to Galveston, which saw the largest drop over the month. Now, looking at the cities in our region for which we have unemployment rates, we have 17 cities for which we have numbers. And this time around, what we see is that all but 2 of our cities saw their unemployment rates fall from April to May. And those 2 that didn't see that, Baytown, which has traditionally had the highest rate in our region, right now sits at 23.7%. And it was already pretty close to that before. I think it's up about 0.3%, as well as Lake Jackson. So those are the 2 areas that saw the rates rise over the past month or so. I'll also point out that Galveston City, in keeping with the county, saw its largest percentage decrease or percentage point decrease of the 17 cities in the region, a full 2.2 percentage points. And again, we have to chalk that up, at least in the face of it, to their tourism and leisure hospitality type industry seeing a bit of a recovery as things opened back at the beginning of May. Now, I'll pause here for another moment here. Peter, any thoughts, any questions?
There was
okay, great.
During the survey, there was an issue about people who thought they were temporarily unemployed or expecting to go back to work. That was
that was more of an issue at the national level. I don't know how much it really applies to other smaller geographies, frankly. I haven't seen anything written on it, but it stands to reason that if it did apply at the national level, to some degree, it would have to here. But the gist of it was that there were a number of people who were indicated or marked on the survey as being employed, but away from work or on temporary leave for whatever, or I forget the terminology, but something to that effect. Whereas in reality, they should have been marked as on temporary unemployment. In other words, they would have been counted as unemployed. So had those people been added back into the mix, for April, the national unemployment rate would have hit probably 19%. Here, I think for May, it would have risen to 16%, if I'm not mistaken. So those people definitely are causing the numbers to be perhaps a bit lower than they should be. But the policy of the Bureau of Labor Statistics is not to alter any of the responses once they've been submitted in order to maintain an appearance of neutrality throughout the production of the numbers. So, but you raise a very good point there, Peter. That is something else to keep in mind. So whatever numbers you're seeing, until they correct that issue, and we have 2 jobs reports where they unfortunately have not been able to, the actual unemployment rate is probably a few points higher than what we're seeing.
I'm now going to throw you a little curveball. I hate to do this, Parker.
Sure.
But one of as you may know, Rob Kaplan, the president of the Dallas Fed, also monitors what is known as U6. And right. Is there anything we need to know about U6? One, why he looks at it, which I think is, those who are disengaged from the workforce, but Is there anything there that we need to know about?
Well, unfortunately, we don't have that number for the Houston region. We simply don't. So if you're not familiar, there are actually, I believe, 6 different versions of the unemployment rate. U3 is the official version that is published each month. That's the national number that you'll see. And it's a fairly conservative definition of what it means to be unemployed. So if you have looked for a job in the last month, have not worked for pay or profit, essentially you're counted as unemployed. It has nothing to do with whether or not you're receiving benefits or anything like that. That is a myth that has people have attempted to dispel many times, but it keeps popping back up. I see it all the time in discussion boards and even in articles from reputable sources, believe it or not. But it's a metric that's worth looking at because it captures all of the marginally attached people to the labor market, people who are working part-time involuntarily because of economic conditions, people who haven't looked for work in, say, the past year. It captures more than just that very conservative definition that U3 typically does. And it is worth watching because it gives you a sense of overall underutilization of the labor market. And that's certainly concerning because it has an impact on aggregate earnings, for example. It has an impact on skill acquisition. It creates a number of issues when your labor force isn't being fully utilized to its maximum extent. So I understand why it's worth looking at. Unfortunately, we just don't have it here for our region. The closest thing we have is for the state of Texas. And even that number is a rolling 4-quarter average. It's a very, very smoothed out number, and it's not even easy to find, frankly, on the BLS website. It's not one that I typically look at very often just because of its lack of relevance, unfortunately, to certain things. But I do understand why he looks at it and why our Fed in general looks at it as a metric of how well our labor market is doing.
So basically, it's not timely enough for us to view it as actionable, but it's something just to keep.
Correct.
For long term.
It's neither timely enough nor specific enough to our region here for us to be able to find any use for it, unfortunately.
So I know you have a couple more slides kind of on the employment setting. I'm going to remind the audience to please post questions in the Q&A tab as we'll take a break in just a second. Go ahead, Parker.
Great, thank you, Peter. All right, so let's talk about the national employment situation and that report that we got in May, because this was really a head scratcher. It was completely out of the blue, and it really does have implications for us trying to understand where things are going. And frankly, it confuses our understanding of where things are going. So let me explain. So let's back up and cover some of the facts around the May jobs report nationally. We added 2.5 million jobs over the month. The unemployment rate, that U3 rate that I mentioned, fell from the mid-14s down to the low 13s. The consensus forecast going into the May jobs report nationally was a loss of about 7.5 to 8.3 million. There were even some estimates out there as high as 9 million jobs we lost in May. And the consensus unemployment rate was that it would rise to 19%. That didn't happen at all. Now, keep in mind, part of what the forecasters professionally were doing this, were basing this on, was the fact that between the April jobs report and the May one, there were 10 to 13 million new claims for unemployment insurance. So you have to assume that at least some reasonable percentage of those are legitimate instances of people becoming newly unemployed, and therefore you would assume that those people would be factored in and that they would essentially outweigh anybody coming back to work just because of the sheer size of it. If we're talking even 50% of that, that's still a pretty big number. However, that's not what happened. Locally, what that would have meant for us is that our unemployment rate would have risen to about 19%, and we would have seen a loss of around 100,000 jobs here. Now, part of the reason why it's surprising is the following. So here is, and this gets a little esoteric, and I've tried to pare it down as much as possible, but essentially what it boils down to is the timeline of us getting these sorts of results at this stage in the COVID, essentially recession is what we're going to call it. So one thing you need to understand is that the job surveys reference the week that includes the 12th of the month. In this case, that would be April or May 10th through May 16th. Okay, keep that in mind. We know that the second round of PPP loans were finally available after April 27th. Okay, the first round ran out within, I want to say, the first week of April. So there was a gap there. You've got to get that money into employers' hands. They've got to be able to apply for loans, and they've got to turn around and then bring people back on payrolls. And think about the fact that they've got to do all of that before the week of the survey period there, 5/10, 5/16. Just pointing that out. 5/1 here, Texas, we started allowing restaurants and retail establishments to reopen to 25% capacity. The first fell on a Friday, so realistically, you can probably expect that businesses weren't ready to start opening until the following week, maybe Monday. Restaurants typically don't operate a lot on Mondays, so frankly, you would probably imagine they would have to push it well later into the following week. So again, we're bumping right up against that 5/10, 5/16 window. Salons, barbershops, etc., allowed to open at 25% about a week later. It wasn't until the 22nd that restaurants, retail were allowed to increase their capacity up to 50%. Bars up to this point had not been reopened. So a major part of your leisure and hospitality sector had yet to be contributing to job growth here. So that's another thing I want to point out. And that's also well after the survey period. It's not until June 6th, this month, that the Kemah Boardwalk and Galveston Pleasure Pier reopened. So granted, I don't know how much of that really represents Galveston County, but I suspect there are reasonable bellwethers of the tourism industry down there. And the fact that they didn't reopen until June, well after the survey period, makes it hard to understand how Galveston's unemployment rate could fall by so much, as I pointed out on the map slide, during a period after which the survey occurred, essentially, okay? And then, of course, you've got, not until the 12th, restaurants and retail allowed to increase 75% capacity, bars at 50%. Keep in mind, during the window between mid-April and mid-May, so after the last jobs report before the May one, there's about 110, 150,000 additional claims for unemployment insurance here in our region cumulatively. Keep in mind also that we have extended UI benefits that are intended to continue through July. Now, I don't want to get into a deep discussion about how that might have disincentivized people coming back to work, but it stands to reason that it would have had some impact along with all the other things here I mentioned. So we're talking about everything on this slide having to line up almost perfectly, and we have to discount those two bottom points as far as having any negative impact on what we would have seen in terms of job growth. So I'm not saying it's impossible, but it's a tall ask when you consider the short amount of time. And then you have to consider that the survey has to capture a window of a week. That's all it's working with, essentially. So it just makes it very, very surprising to see that effectively the jobs report was able to capture an inflection point in the recession now in almost real time. You'll recall that we had to wait until May to be able to get April's numbers that would finally reflect the massive downdraft in the job market that we were expecting that started really towards the last 2 weeks of March. So there's quite a bit of a lag there. That lag has essentially been compressed down to almost, let's say, a couple of weeks to a month. And that, for me, that strikes me as being fairly unusual. I'm not saying, again, it's impossible. It's just very, very surprising. What I would have expected to see was perhaps incremental worsening of the situation, followed by perhaps a modest beginning of a rebound, and then starting to see this sort of V shape that we're seeing here now. We skipped over those intermediate steps and went straight to the V shape, or at least the start of it. Now, if all that said, granted, things are developing so quickly with the virus, we may be looking at least a pullback in terms of some businesses here. I wouldn't be surprised, just given the growing alarms that you're seeing in the news every single day now. So again, these are just things I want to keep in mind. It's always good to have a little bit of skepticism with some of the numbers that you're seeing. Again, I would expect to have seen this, all else equal, maybe happening in June, maybe happening in July. Seeing it in May, frankly, was surprising, and I'm not the only one who thought that. So that's just kind of where I want to leave that, but I did want to provide that insight just to give people a more realistic perspective on what we got out of the May jobs numbers.
And I'm sure we'll have you back, but that timeline is helpful because I think there are some other triggers that are going to show up a little bit later, which may have other impacts, like the continuing unemployment, the additional unemployment payments people are getting.
Yeah, I think that we will see some of these trends start to, frankly, if nothing else, best case scenario, go sideways. I think the last time I was here, I mentioned that I could envision us having a more sort of distorted W-shaped recovery, and with essentially the number of COVID cases starting to spike once again, I think that scenario is very much in play. So.
Because you've got the PPP terms and you've got people who've acquired liquidity that may not survive as well. So that, I think, is part of that whole kind of troubled W that you're talking about.
Actually, and also too, you're looking at after July, some of those unemployment benefits starting to roll off. We may see another stimulus package. Frankly, that wouldn't surprise me either. I know it's being talked about. I don't know where that is at the moment, but it wouldn't surprise me depending on how things unfold here in the near term. So what does this mean though for our local unemployment rate going forward? First, let's just talk about where unemployment insurance claims have been over the last several weeks now, last couple of months, in fact. And what we're seeing is a continued decline in them week over week over week, which is great. So they're now down about 70% from the highs back in early April. Right now at about 22,000 claims or so, 23,000 claims, still about 4 times higher than we would have been, say, pre-COVID, but the number has come down dramatically. So we've been making progress. So this is encouraging. It really, really is. Now, the thing is, I've been using this in a slightly different way and looking at it cumulatively, month by month by month, to try to get an idea, to get some sort of preview of where the unemployment rate might be headed. So, for example, those first 3 weeks there did a pretty good job of lining up with the job losses we saw in March and driving that 5.6 unemployment rate. April, about the 314,000 that you see there on 418, more or less lines up with about the 340,000 jobs that were lost in April. So again, pretty useful. Things are more or less matching up within reason. And then we get to May and it all goes off the rails. We had an additional 117,000 claims between 425 and 516, and yet fell. So one of the most valuable pieces of data that we've had access to up to this point, and again, I have to give kudos to TWC for even making this available, because prior to this, it wasn't, and we just didn't have this. But its utility is now coming into question. If you can have this happen and our unemployment rate continues to fall, then what does that mean for June? We've had an additional 77,000 claims between 523 and 613. So taking what happened in May to its logical extreme, you could see the unemployment rate, and I'm being facetious but not, an unemployment rate dropped to 11% or something like that. I frankly, honestly, one of the best guideposts that we've had up to this point. It's now debatable how useful this is going to be going forward. Now, some of you might think, well, what about continuing claims? Nationally, we get those every single week, which is great. Unfortunately, here at the regional level, we don't. We get them, and we get them basically a month behind. We get them when the jobs numbers are released for Houston. So we look at this here. Here's what we've had over the time. The black line there is actually me back forecasting what claims probably looked like during the Great Recession, Hurricane Ike, Katrina, and whatnot. The blue line is actually confirmed data that I have from Texas Workforce Commission. Bottom line is this: look at April 2020, 232,000 continuing claims, far and above anything we saw throughout the Great Recession or any of the 3 disasters that have impacted the Houston area in some way. May, that rises to 265,000. Again, this is still over a window when the unemployment rate fell. So for the time being, not even continuing claims really gives us a good look going forward of what we can expect. And in essence, we're flying blind. So I did want to make that clear. Make no mistake about it, I will continue to follow the claims numbers religiously, but I'm definitely starting to question the utility of them as far as providing insights into where we might be going in the near term. So that's really the point I wanted to make there. I think it's a very important one, and just something for people to keep in mind as you see these headlines coming out each month. Now, I did include this slide here as a bit of a bonus. Now, while the UI claims data might not be that great for figuring out where unemployment is going, it might be able to tell us something about the composition of people who have been laid off and how that is evolving over time. So what's going on here is you have 6 charts, and what these 6 charts represent are the share of claimants by educational attainment. So for example, that upper left-hand corner, you've got the number or the percentage of people with less than a high school diploma filing for UI, let's say on 3.7, that was 11%. So 11% of all the claimants indicated they have less than a high school diploma. By the time you get to 613, that percentage has risen to about 15. So it's interesting that you're starting to see this morph a bit. So those with the least amount of education are starting to make up a larger part of the claimant pool. Same thing you're seeing actually with high school graduates as well, those with the GED or some sort of equivalent as well. That started off at about 48%, bottomed out at about 44%, and has continued to slowly but steadily rise, and is now the majority, the slim majority, but the majority of claimants up to the most recent data that we have as of 6/13. This, I think, makes the case for post-secondary education, if you ever needed an additional one, individuals with some college, no degree. And this category can include people who have a 1 year, just 1 year in community college, or less than 3 years in a 4-year program as well. So it's sort of a mixed bag. It doesn't quite follow the conventions that are adhered to by BLS and other entities. But in either case, you can see that at one point, it was those with some college, no degree made up almost a third of all the claimants that were out there early on in the downturn here, and that's now dropped to about a fifth. So quite a bit of progress in that space. Associate's degrees individuals, they have seen pretty steady numbers overall, not a whole lot of variation there, but trending downward. Interestingly enough, individuals with bachelor's degree, you see a spike in the first couple of weeks there, and then after that, it starts to sort of stabilize at right around 4 or 5%. So probably the most stable of any of these categories. And then you have a bit of a residual there, those that had no response for level of educational attainment. So I think this has implications. I really want to include this to sort of help facilitate the conversation around workforce, the intersection with work and education, and perhaps the segments of the population we need to be thinking about even more so going forward as this continues to evolve. So I'll pause there for a moment, Peter, and just kind of get your thoughts and see if anybody.
We actually have a couple questions from the audience. I think one you've already addressed, which was around the continuing claims, and another is around kind of this, which probably showed up in U6, the number of people who dropped out of the workforce, which I suspect you don't have a lot of information.
No, unfortunately not. We really don't. You can only look at the just overall size of the labor force. It's not a clean calculation because essentially the labor force is everybody who has a job or is unemployed and looking for a job, but they have to be looking. It doesn't give you a sense of who withdrew. It gets very, very messy trying to work out how many people left each month when you have people going back to being employed, people who are going from not looking to becoming unemployed. It just gets very, very messy. It's one of the reasons why it's been one of my least favorite statistics over the years, but obviously now it's incredibly topical what's going on.
And I think another question that's here is going to be answered as we get into this one, which is, who's hiring and what are the opportunities for retraining? So why don't we go ahead with this?
Yeah, absolutely. So if some of you may recall last time around, one of the things I've been looking at are job ad trends. And again, the idea was to be able to identify at what point in time do employers start reacquiring appetite for hiring? Because this should be a leading indicator. Given our jobs numbers, frankly, from May, I don't know that it is. Maybe it's coincident now. But I still look at it anyway. It does provide some useful information. But let me show you what's been going on. If you look at this day by day for the last couple of months, and we'll talk about some trends here. So we've got two squiggly lines on the graph. The orange line are job ads each day, 2019, March 1st through about June 23rd, just a couple of days ago. You can see 2019, they were nice and high and even trending upward. Obviously, 2020, different story. The two diverged pretty early on and have never really looked back. Now, understandably, job ads started getting pulled back slowly but surely, starts to level off there, even starts to increase, believe it or not, towards, let's say, about middle of May onward, which might line up with some of what we saw. But then after May 28th, we see a drop off. And in fact, about 1 out of every 5 job ads for the region disappeared. The explanation that I received after reaching out to the folks at MSI, the source of this data, is that there was a mass expiration of job ads right at the end of May. And there was also a culling of job ads that hadn't seen a lot of activity in a while. So the question is, well, is this a legitimate economic phenomenon with employers pulling back as far as their appetite for hiring, or is this just a technical drop because of the process they use for scraping data from the web and identifying job ads out there? My hope is that you would see a rebound and that would have corrected itself. It doesn't look like it has. So what that means now is they're continuing to diverge, and now we're down about 40% in terms of the number of job ads, June 23rd this year compared to June 23rd of last year. Now, admittedly, looking at daily data is fraught with issues. It's very, very volatile, but if you look at it over a long period of time, you can still identify some trends, which I think we can here. The issue for this is that it complicates my attempts to analyze what's going on, because I look at job ad data from 4 different time frames: 7 days over 7 days before that, 30 days compared to 30 days before that, 90 days compared to 90 days before that, and 365 before 365, okay? So the idea is that you should be able to look at this over time and see, okay, week over week, we're now starting to see an uptick in job ads out there. So that maybe that's the first sign that things are starting to turn around. Eventually that's going to start to become less relevant. You're going to want to look at month over or 30 day over 30 day changes, and eventually 90 day and so on and so forth. That was my original thought process when I started looking at those 4 time frames. Well, with that drop off now at the end of May, it complicates things. It basically destroys the trends that we were seeing week over week, because now you've got that massive just decline there. So The week over week numbers now no longer useful. However, if we look at things month over month, we are still seeing some very encouraging signs. So here's a look, and this is the same day. So what we're looking at here is 30 days, the most recent 30 days compared to 30 days before that. And this is by major industry sector. How many, the percentage of jobs added by sector here on the left-hand side in blue, and in orange on the right-hand side, the absolute number. And what you can see is that just about every single sector has seen an increase in the number of job ads 30 days over 30 days. Very, very encouraging. The few that are down there at the bottom, ag doesn't really concern me a ton. Utilities doesn't move a whole lot regardless. It's the accommodation food service that's flat, but nonetheless, that's still progress. Because if you were to look at these same charts, let's say just a month ago, all the lines would have been pointing to the left, meaning they were negative. You were seeing a loss, a pullback on job ads. So it's a good sign. It's interesting that transportation warehousing is number one on both of these charts in percentage terms and absolute terms. But it does make sense. You consider that if you've got businesses reopening now for the last full month, almost two now at this point, that, well, I mean, you've got businesses that need to restock inventory. That means you need more deliveries. That means you need more drivers. That means you need more warehouse space. So I can completely buy that that's where you would see a pretty strong uptick in demand for workers, given the sort of thawing out of things that we've seen. Other spaces there, I'll make this available, so I won't read off everything. But again, by and large, pretty comprehensive. Now, if we look at the major occupational families that are out there, all of them, absolutely every one of them has seen an increase in the number of job ads 30 days over 30 days. I think it's interesting in this case, when you look at it, you see on the left-hand side, the very top, building, grounds, cleaning, and maintenance. Frankly, the sanitation process for facilities now to ensure that customers as well as workers have a safe environment, I can completely buy that that's what's driving that. But you're also seeing it across the board in healthcare, you're seeing transportation, personal care services. On the right-hand side there, it's interesting that office administrative has seen such a strong comeback. Still not sure completely what that's about, but nonetheless, though, that's 2,400 additional job ads out there that didn't exist the month before. And you can go down the line here and see. So definitely starting to see some encouraging things. Last time I was here, I mentioned that you almost had to look at individual employers to start finding opportunities. Backing up to this previous slide here, looking at the industry sectors, you can now look at just about any one of them and find at least some employers that have begun posting more job ads indicating they're starting to hire a bit again. Now, with COVID evolving again, once again, as quickly as it is, who knows how long these trends will last. But up to this point, though, we are definitely seeing some promising things, and we're seeing them in a window that makes sense here. We're talking about basically earlier this month. Completely can buy that. Again, the official jobs numbers that we saw seem to be a little premature for seeing that, but this does seem to corroborate it overall. So I did want to share that, hopefully try to end on somewhat of a positive note. That's pretty much all I have here. And so I will turn my screen back over and I'll take some questions if we have time.
No, we've got some time, and there are a couple. And I want to kind of get to one which really gets to, if you had to give advice to folks that are trying to help connect individuals and give them skills to jobs, what would be the place to be looking for, given what you just presented?
Let's see, actually, here, I'm gonna have to ask you to talk a little bit louder. First, you were trailing off there at the very, very end, so I couldn't quite get the end of the question.
I mean, it's this idea that people who are working with folks to connect people to jobs and get them reemployed, and thinking about the skills that are needed. What are the sectors you would think are the good, favorable ones that people should be looking in, given what you just shared?
It's really tough because everything across the board got hit, and you're seeing everything else, everything start to come back also in tandem as well. Obviously, the magnitudes are different, but so there's really nothing that's pulling away from the pack so much that you could argue is really a safe haven. And think about it, there's not like there's a massive pool of just open jobs that's sitting out there that when you have a downturn in one part of the economy, people can flee to. That even when, for example, our oil and gas downturn of 2014, 15, 16, it's not like there was a giant swath of the economy where you could just absorb oil and gas workers overnight until things turn around again. Granted, some people were able to, but the skill sets in that space are oftentimes so specific to the industry that they don't necessarily readily translate overnight to jobs in other parts. And we're facing sort of the same problem here as well, but it's on a much, much broader scale. So there really aren't a lot of good safe havens. It's really going to come down to, well, businesses that are actually able to have managed to weather the storm, those that have been managed well, that are positioned correctly, that are able to adapt. For example, being able to provide, let's say curbside delivery. Might seem minor, might seem sort of trite in all this, but think about businesses that weren't prepared to do that. And the reality for them, and we've seen quite a few that have had to close, the finances weren't there, and frankly, and the business just simply wasn't there, and they weren't able to adapt quick enough to be able to do it. So what you're looking for are businesses that do show an ability to adapt to what's going on here through protocols and whatnot, to be able to continue operating to the extent legally allowed at this stage.
And that gets to another question, which goes back to the slide you shared with us showing the educational attainment and the impact in that space. And the question really does, do you think the claimant education level correlates strongly with the ability to work from home?
It does. I think there probably is some bias there, frankly. I suspect that you would probably skews towards lower earning individuals would be more likely to file than, say, someone who is particularly high earning coming out of a technical job, let's say in the energy industry. So I think you are correct there. Nonetheless, though, if you're looking at, it's implied that you're seeing the shift, though, that the people with a bit more education are being reabsorbed back into the job market a little bit more readily than people with less education. That's really kind of the point of why I was putting that on the screen there. And to keep that in mind, that that's probably where we're going to need additional support going forward, frankly. That will probably be in the form of additional unemployment insurance, extension of the benefits, things like that. I wanted to draw attention to that segment. We've always known that more education correlates with a lower chance of being unemployed and whatnot, and this really does seem to confirm that, and it's doing it in almost real time. So I thought it would be useful to provide that rather than a longer term look back that may not even apply to what's going on, but it does still appear to at this stage.
And another way I think we could think about it is a lot of our industry was deemed to be essential, and then there was a huge chunk of our industries that could work remotely, like our professional services firms and others that can quickly make that pivot. So there's probably not as much inactivity the same way that, the folks that are more in that middle space and low space, if they weren't in one of those essential economy jobs, they were at risk. Is that a fair way to look at it?
Yeah, I think so. Part of the reason why I don't want to lose sight of looking at the UI claims and that change in the composition, because ultimately we are anticipating continued weakness in oil and gas, where there are a lot of higher paying white collar jobs that, to some extent, more likely than others, say lower skill service jobs, could be done remotely. And what I'm looking for is where that starts to turn. Now, here's something interesting. I didn't include a slide on it. I didn't want to chart the audience to death. But believe it or not, if you look at the two core parts of oil and gas, the E&P, the oil extraction and whatnot, as well as the oil field services, and you look at the claims across those two segments, believe it or not, they've actually trailed off significantly going into mid-6/13, I think was the cutoff date there for that data. It was around about 1,500 claims per week out of those industries combined during the, we'll say, mid-April to about mid-May or so, give or take. I have to go back and look. But there was a period there for about 4 or 5 weeks where it was about 1,500 a week. And it has since now dropped into the low hundreds, which I thought was very, very interesting. Given that oil has seen some recovery, I don't know that the industry is looking to start hiring hand over fist or is really optimistic about it. Even if oil were to jump to $50 tomorrow, given where the rig count is, given just the caution that would probably be instilled in everybody and the financial discipline they're having to take on, I don't know that you would start seeing a lot of hiring there anyway. So I'm interested in watching that to see what we can glean from it. But I was very, very surprised that you saw a pretty substantial drop off in claims out of that segment, at least as of the last data that I have available.
There are two other questions right now. One is just kind of, when you look at the job postings, are those online, LinkedIn, newspapers, how are they being counted?
Sure, online, and pretty much every major job portal that you can think of, from Work in Texas to probably LinkedIn, I want to say, definitely not Indeed, because I think that's kind of a competing sort of space, but Career Builder, Monster, all the names that you've heard of and a lot that you probably aren't familiar with. The list is extensive. It's very, very comprehensive. And one of the reasons why I look at it is because it perhaps is even more comprehensive than Work in Texas. I believe Work in Texas now pulls job ads from other sources as well with the upgrade that we received about a year ago. But these folks have been doing it for a while, and I'm able to get historical data. We're able to go back and look at this at least a few years to kind of see what's been going on. So that's really been the benefit of it. But yeah, you're absolutely right. No, it's very comprehensive. It's mostly online. They look for deduplication. They try to find identical postings in multiple places, account for that, and clean it up as much as possible. It's all done through machine learning, but yeah, it's a valuable source, and I'm glad we have it.
And here's one that both you and I can probably tackle, which is really how does the Workforce Board and how does UpSkill Houston think about the upskilling and retraining programs that are available? And then there's a nuance to this question as well, which is related to kind of this person's description of a value-added workforce development for folks with autism, Down syndrome, second chance, etc. So I think you all have a point of view at the Workforce Board in terms of opportunities you're trying to train people up for, both in the short term and then the long term, correct?
Yeah, and really we mostly look at long term, frankly. Short term might be considered when an employer or a group of employers comes directly to us and they have a specific need and they want to work with us to try to find the talent they're looking for or perhaps reskill or upskill their existing workforce. But that's a very, very surgical, very strategic sort of arrangement. By and large, what we try to do is focus on the long term. Again, as I said before the last time, fundamentals of what our job market looks like here. Now, again, there's some sort of curveballs thrown into that. Obviously, now jobs that have to be done physically in person have a level of risk to them that they didn't have before. And the question becomes, well, what's being done about that now? So we're seeing, let's take, for example, the chemical plants. Is there any way to take the precautions that are happening there and translate them into the training programs that would lead to those jobs? That's really where I see this having to go, is looking at what employers are doing and seeing how can you basically replicate some part of that in the training stage. Because otherwise, I'm not really sure what the options are. I mean, it seems pretty binary. We either have to find a way to physically protect ourselves from the virus involving personal protection equipment and whatnot as we go out into the world. Things are going to have to be done more remotely, and we're going to have to beef up the technology that allows for virtual experiences to be more meaningful going forward, or we just have to resign ourselves to lockdown and economic malaise that lasts who knows how long. And so there's not a lot of good options there, or hopefully we get a vaccine, but again, that's a true unknown there. The others we have some control over. Yeah. So I would like to see more of that happening if at all possible. But again, this is me, ivory tower, commenting on this. I'm sure that there are individuals out there in the audience that would probably have more specific sort of issues that you want to address. And I'd be more than happy to hear about those and take that in and try to think about it some. So.
And I think, I've been engaged with some employers, and I think, where we open is, for the last couple of months, they've been able to, for the most part, have a very safe work environment. And it's now the community spread that's exposing their workers. It's not in the workplace, it's outside of and then being brought into. So there's a big challenge there as our employers are confronting that. And also to this question is, I think there are going to be opportunities when we should be releasing a report in probably a couple of weeks that's going to look at how do you navigate this changing nature of work, because automation technologies like robotics and AI and machine learning are disrupting where folks are coming, and we're going to need to be building people's continual learning abilities. And then just this reality, digital skills are critical in today's job market. And if you're not proficient in Microsoft Office to begin with, you're going to be hugely challenged to find success, which means, not only we're processing email, but also thinking about, proficiency in Excel and being able to do the basis of data analytics. And when you think about Salesforce, the role of customer relationship management, those are going to be skills that would actually kind of, in some sense, build some more resiliency in the workforce if they don't have those. And those would be other places to start. What do you think, Parker?
I completely agree. No, everything you're saying there, we discussed it last time as well. Absolutely, no question about it. And that becomes even more important if you consider the possibility of demand in general across the economy being somewhat depressed, depending on how this evolves, for an extended period of time, where you just have people consuming less, going out less, taking less risks that would have been just normal behavior before are now considered to be more risky, and people just pull back. And what that does to everything from service sector jobs at the low end to even higher end, higher value, for example, think car sales or even home sales and things like that. So it is going to be more imperative than ever to have digital skills, partially because it can be done remotely. That makes them a bit more vulnerable in some cases from a sort of global economy standpoint, but it does make them more resilient in the face of a COVID-19 world and the aftermath of it. So absolutely indispensable. Can encourage people, again, if people have the time and opportunity, if they're in lockdown and have the opportunity to do it, try to acquire some more online training, pick up some sort of additional skills, exposure to something, anything that will at least allow you to be able to either apply something in the job or at least discuss something with an employer that would signal that you're still engaged, you still are working on trying to acquire skills, you're still engaged with the workforce. So I think those are some things that people need to try to keep in mind going forward as well, and that hasn't changed over the last couple of months.
Yeah, and so I mean I think there's always going to be the challenge. When we were in a growth economy, there was a huge opportunity, particularly to deal with those second chance and other segments of the workforce, and it's just frankly probably going to be challenging in today's world, in today's market, for folks with developmental disabilities as well as people re-entering from the criminal justice system.
Yeah, absolutely. No, that's gotten much tougher for them. So yeah, those are definitely a lot of things that my heart goes out to the individuals on the front lines, trying to work with these individuals to help find them opportunities. All I can tell you is just don't give up. Bottom line is that we're all going to have to move forward. The economy is going to have to keep going on some level. People are going to have to continue working. It's just what that looks like and how below optimal levels that is for how long. And so how long can we, manage that?
And once again, Parker, it's always fun to have you on here and spend time with us. You bring so much interesting and rich information, and I really appreciate the good work that you do and the good work that you support our region with. Yeah. And I want to remind folks that, go ahead, Parker, I didn't mean to interrupt you.
Oh, no, I was just going to say thank you very much. I really appreciate the time and attention you guys are willing to offer.
And at some point we'll have you back when there's a little more data that we can actually probably have some actionable stuff. But once again, I want to remind folks that we're at this critical inflection point with respect to the pandemic. And I'm asking that you do what you can as leaders to ensure your safety and the safety of all Houstonians. And if you recall, there are 5 things that you can do. One is, social distance, wear a mask, wash your hands frequently, clean and disinfect surfaces that are touched. And if you've been exposed, please get tested and make sure those you've been around know about it. And once again, thanks to the audience for participating. In the coming weeks, we have several more topics that we'll be bringing you. Kind of some new skills development efforts offered by the Texas Workforce Commission. We're also going to have a special segment that talks about the skills and abilities that veterans bring to the workplace. And then finally, as I mentioned, early next month, we will be releasing a new report called Navigating the Changing Nature of Work, which is a companion to our Middle Skills Matter report. And it will highlight kind of this whole issue of what automation technologies are doing, what the increased digital skills that are needed, and then what we should be doing as workforce stakeholders is how do we help people navigate kind of those changes and provide upskilling and reskilling opportunities and pathways to opportunity and prosperity. As these forums are scheduled, we'll send out a notice so that you can register, and thank you for attending. Have a great day. Thanks, Parker.